Moving on to another big retail story, and Courtney, please, we're begging you, stick around. Macy's taking a deep dive after S&P cut the department store's credit rating down to junk. So the company's turnaround efforts may actually come up short. Shares falling more than 3%. They're down 35% in a year. Karen Finerman, the market cap is now under $5 billion. Any reason to own Macy's?
Well, I don't own it. That might be the reason right there. But I don't know. There's sort of a disconnect here. I know they don't have a debt problem in the near term. What's astounding and has been for a while is this is a company that pays a dividend of 9+, right? So that is a giant disconnect. I mean, maybe they should cut that dividend, buy back their own debt. Right? I don't.
When we just talked to Jeff Gennette, the CEO of Macy's, a couple weeks ago, I asked him that question: are you going to keep the dividend? And he was very emphatic, saying, "No. I mean, yes, we're keeping the dividend. We're not cutting it. That there's really no change to that strategy." And then sort of was talking about this bigger shift in this Polaris strategy, which S&P is basically saying, yeah, it might be the right thing, but it's in a really tough sector, and that seems to be a bigger reason for the downgrade, not the debt. But I agree, it is a little confusing what's going on here.
Yeah, I'm trying to look at their debt. I mean, their debt looks to be about $5 billion, so the market cap and the debt are about the same.
And they've paid down about $3.5 billion in debt over the last 4 years. They have a really decent cash flow. So this is serious and a significant.
It's always the bull case is the real estate, right?
Yes.
I mean, everyone says, well, they own all this real estate and it's going to be.
So was Sears.
Yeah, I'm saying it was a good theory.
I'm just saying it's not a bull case. I think it's going to go to zero.
Tell me you've heard it. I deserve that, by the way.
And Karen is not espousing going out and buying companies for a dividend yield because that's not what she does.
Right.
And so a 9% dividend yield, you can lose half of that very easily in Macy's on any given day because that's the volatility in the stock. The company does not necessarily have a debt issue. It's got a same-store sales growth issue, and it has none. And it's actually a contracting top line. So I think the company's interesting here. I think today's announcement is a non-event on some level for people that were looking at this stock. Nothing new happened today, in my view.
The one thing I think about Macy's often is we have seen the department store sector shrink over time, both in the number of players and even the stores themselves. And we looked at a name like Best Buy and thought, why do we need a consumer electronics store? We've got Amazon. You can buy it online. But Best Buy figured out a way to come out of that a stronger, better company. I just wonder, is it possible that we do have room for maybe one department store, even if it looks very different than today? And could that be Macy's? Just a question.
Good question. Courtney, thank you.
You got to stop showrooming at Best Buy for what you're going to buy.
That's first of all, you say that to me, you know it's Melissa Lee does that. Mel goes in there with her little notebook and takes notes, looks at everything, then goes home, and she's watching right now.
She does all her homework.
It's not
always.
me. You just showroom the undergarments.
No comment.